Yes, we are live. So hello everyone. Thank you for joining our webinar. My name is Olena Grinyuk and I'm Regional Manager for the Central Eastern Europe at the SME Banking Club, and I will be your host today. And the topic of today's webinar is building a digital end-to-end lending journey for SMEs. And I'm very glad to be joined by Jens Volostak, CEO at Spotcap, which is a Berlin-based fintech operating both as a direct lender to SMEs and a lending as a service provider. Hello, Jens, and thank you for joining.
Thank you for inviting and looking forward to the session.
Okay, so before we will go to the topic, let me mention some organizational moments. So our webinar is scheduled for 40 minutes. So we are recording this webinar. So right after we finish, you will receive the video and the presentations. And in the end of the webinar, we're going to have time for your questions. So please type your questions even during the presentation, and we will be ready to answer them in the end of the webinar. And so please type your questions into the chat. So let's go to the topic. Let me give a very short overview on the CE region. So here, what we see in the region in the context of digital lending to SMEs. We did a study last year on the online banking functionalities for SME customers. So we covered 25 banks with 5 countries in the Central Eastern Europe. In terms of digital lending, actually less than 10%, and namely 2 banks in Poland, having fully digital lending process for SMEs, so starting from the application online and till the disbursement and even loan administration. And so namely these are ING Bank and M Bank in Poland. And the other statistic here is that in general 5 commercial banks offer the option to apply online for the loans, and 2 banks in Romania, which are TBI and ING Bank, and 1 bank in Bulgaria, which is ProCredit Bank, offers such a solution for SME customers. So we are updating now the results. So I think this year will change a bit the situation. So what we see at the moment, and what are the changes during the Corona crisis that happened here. So for example, here in Poland, almost every bank implemented digital signatures for SME customers, meaning that either this is a signing of a new agreement or this is a signing of the annexes to lending loan agreements or factoring agreements or leasing agreements, so then can be signed purely digitally without visiting a branch. And this is done via 2 ways, let's say. So the first one is when it is used your e-signature via the governmental portal in Poland, and the other one that you see now on the screen, this was actually a good case here in the Central Eastern Europe region, that 3 banks in Poland actually invested in one fintech, which is called Autenti, and providing actually these digital signatures. And this was like a joint investment, and the customers of these banks can use these as a digital signatures, but also banks are planning to use this solution to digitalize the document workflow inside the banks as well. So we have also been discussed recently a lot that the real and maybe even the fastest way to accelerate digital transformation in banks is to cooperate with fintechs, which already have some solutions in their specific areas. And here, Jens, I'm actually passing the word to you to share your experience on digital lending at Spotcap as a direct lender and also in cooperation with banks.
Perfect. Yes, I will take them over. And thanks again, Olena. Highly appreciate also the invitation. And while I'm preparing basically the screen sharing, let me just quickly also introduce Spotcap to you. Everyone who doesn't know Spotcap yet, we are a multinational fintech company in the SME credit lending space. As Olena said, we have basically we have started our operation in 2014, and since then have issued around $500 million in credit to small businesses across 5 countries, and have also moved into the lending as a service or white label SME lending solution business back in 2018, and have basically provided our solution for digital SME lending to financial institutions, both in Europe but also in overseas. And that's also where I want to talk a little bit about today, how a digital process can look like, and obviously how our solution also might be possible to be used by some of you in case of interest. But before we move into the digital SME lending process, let's take a small step back and why SMEs and their directors, owners are so important for the financial industry. As you probably know, that on a global level, SMEs create an impressive 850 billion annual revenues for bank, which is roughly 20% of all banking revenues. So there's definitely some significance in there. Nevertheless, the owners and directors behind those businesses, they are becoming more and more demanding when it comes to a seamless experience, similar to the ease and comfort of their consumer buying experiences, which they have with the Amazons, Apples, Ubers, and the like. And this also applies in the end to lending, where the process is still relatively manual, and a much better digital approach is actually required than it's existing today. And there are a number of studies also and observations out there. And as of today, the average decision times for assessing and approving and granting SME credit are still between 3 to 5 weeks. And hence the need to make digital transformation and deliver a much shorter approval is probably as big as it never was, especially as customers' behaviors and needs are changing, and also not to really expect it to come back to old habits, particularly now in the COVID-19 at times, as Olena already outlined. There is some kind of digital engagement which is very likely to stay. And collaboration with fintechs per se, or also fintechs like Spotcap, are generally viewed as a very good or even the best strategy for banking executives, according also to a recent study. And this is also already a way which multiple banks have actually used for years. And those who have actually embraced digital transformation have seen cost reductions of up to 40%. So actually quite successful. But it's launching a digital SME lending solution per se is not only helping to achieve cost goals or increase efficiency, so to say. It also allows to tap into a new segment, for instance, or create additional revenues with existing customers, meeting their demand for a seamless digital experience, which maybe doesn't exist as of today. And at the same time, it also gives the possibility actually to expand also the risk framework and rely on, for instance, cash flow and transactional data, which is particularly important for micro businesses and sole proprietors, that all in the end can help to improve the risk cost and allows a fair assessment of the so-called real-time performance of the SMEs. So there are multiple ways. And lastly, obviously, it's also about actually launching something with a partner potentially in a relatively short period of time to also test the proposition, to further iterate. And that is something where a fintech can definitely help to be of help to financial institutions. If we now, before going into a live demonstration, if we now look at Spotcap in a more precise way, then you can see that we have developed and obviously also use this in multiple jurisdictions, a proprietary platform which we call Lendins, which is made up of in total 5 main modules, which can be used in combination or in isolation. And as I said earlier, that is already in use by several financial institutions, where Spotcap basically acts as a solution partner. And those modules, they have different purposes, and you're going to see some of them basically in live action in a second. They offer a significant amount of flexibility and customization for the topics which are important for an end-to-end digital process, such as onboarding verification, very important also an advanced and automated data processing of, also unstructured data or, offline data, such as from financial statements. or any other financial documents, but also then a decision engine, to embed rules and models and workflows all the way up to a loan servicing module, which obviously is needed to eventually issue loans, which would be in the end the lending as a service solution, an end-to-end platform. If you carve out this loan servicing element, then it's basically we talk about a decisioning as a service solution. And I now want to showcase to you how Lendins works in practice. And this is based on the solution we have in the Australian New Zealand market as one of our 7 markets in total, either both for Spotcap or institutional clients where we have customized Lens Suite to the local needs. And this is one particular flow now for mid-sized, I would say, businesses in essence. And as I said earlier, the flow can be also look vastly different. So if you go into
Sorry to interrupt for a second. We have here a request if you can remove the preview on the application, because it a bit covers a bit the view. This one, if it's possible. Thanks.
Sorry. No. Yeah, that should work now. Okay, cool. So the starting point, obviously, of the user journey is a company or a customer registration. The companies, the borrowers, so to say, they come via the website through landing pages, or can also come via distribution partners, where we have also a partner portal built. One way or the other, especially if it's a new customer, they need to first of all create a free account, which can happen via email address and password, but also customer name and contact details can be added. This is the first step. And then this step is then followed by a step which we call pre-qualification. That is a step where a couple of first indicators towards the application, but also about the business, are requested to be filled by the borrower, and that allows to basically run basic eligibility checks, but also apply a high-level pre-qualification algorithms to basically see whether that business actually qualifies for what the institution wants to offer or can offer to them. And in this case, basically, it's, for instance, the legal type. That was actually switched back here. Sorry for that. It's something like the legal type, the revenues, the purpose, and the requested amount, but also the years in business, which are usually kind of eligibility criteria asked. Once they've passed that step, there's a main application dashboard which we have built, which again are all individual components, which they can be further added. Some of them can also be removed depending on the underlying risk model in the end. And what you can see here is 3 main also data sources in the end which you're using, which are embedded into these 3 main steps. One is we call basic information. It's particularly about the business and the individuals behind it. The second is about bank account information, where it's about connecting or providing bank account information, which are used for the assessment. And the third one is our financials, either documents and or certain questions we ask the borrower, which are all then used in the assessment process. The general principle is that we ask for as little information as possible from the borrower. And what you can see here for the basic information part, for instance, is that we try to avoid all kind of, somehow this embedded video is not that easy. It's basically, sorry to jump in a little bit. We basically ask for company information about, and to actually then obtain third-party data from central registers or from credit bureaus, and we're using some also some auto-population algorithms via third-party APIs to, for instance, in that case, to have a company registration lookup, which allows to eventually also pre-fill information such as the authorized signatories, which are directors, to then have as little information as possible required to be entered by the respective customer. So that step is basically used to then eventually pull credit bureau information from the borrower, all about the company, but also about the individual, and that usually takes like a minute to be filled out by the customer, so very lean. And the second step, as I said, it's about providing bank account information that can either work via bank account connection through a third party, i.e. PSD2 provider, open banking, or via screen scraping. Multiple possibilities exist here. Some of them are also proprietary by Spotcap. The alternative to this is providing bank statements via uploads, either PDF or CSV, and that is basically then all in the end required that up to, in our case, 12 months of bank account transaction data can be accessed to assess the borrower. And finally, the last step here, and you can see also in case of connection that they are directly verified, is about the financials, the financial documents. Here you can define different type of documents which are required. It's usually annual accounts, some VAT statements, and further country-specific ones. The customer providing these documents, and we have a recognition process built which directly detects the document and the period they cover, and in a second step also extracts all the information from those documents to eventually map it into the mid and back office tools. That is a very powerful, unique tool, which also then allows to give direct feedback to the customer while they are basically waiting to finalize the application. And if something isn't complete, then it's also automatically signaled to them. In the example we have here, which you can see, it's basically a classification process running. It can take a little bit of time depending on the number of pages. And if it's successful, then those lamps here, you can see become, those signals become green. And in case there is something which is still missing, then the customer has the possibility to reclassify the document if that is required or also desired, also by the underlying client. In the end, it's about making it as easy as possible for the customer and to avoid multiple interaction back and forth between them and the back office. If we now after that process, if we now turn back to the mid and back office side, to the underwriting experience, then all the data which has been entered or then accessed via third parties is directly processed, and there is an automatic risk decision made by the system depending on how the system is configured. This is a dashboard you can see, which an underwriter would see if he or she is meant to have a quick view about the case. As I said earlier, there's generally the possibility to have instant decision making, but also the chance to basically have workflows embedded that certain manual checks are then performed by the business. You can see here about this particular case. There's some basic application data in there. There's in the middle some highlights about the risk assessment, for instance, a probability of default from the performance model. There's also then basically a way to estimate the credit amount or the limit calculation, so to say, through various types, but also further highlights from the bank account and the credit bureau, basically all in an overview page, and then allows the underwriter to go deeper into the respective section, depending also on the policy and the workflow which is set. So in the next phase, you will now basically see how some of these do look like. So for instance, here you see basically that the financial information is directly from the documents embedded into, I would say, target P&L and balance sheet templates. You can see those numbers here. They are directly from a mapping algorithm put in there. If there's certain unknowns, then they are highlighted to be checked manually. But other than that, they're all used eventually to calculate traditional financial indicators as you know them, and are used in standard risk models. Very important and very powerful is the bank account section as well. Here, as I said, transactional data is obtained for ideally 12 months or longer, and that the information is aggregated and also visualized to an underwriter for all sub-accounts with regard to the activity, the volumes, also the ending daily balance. But in the end, also going very much down into individual transaction and also semantics, which can be customized depending obviously on the specific jurisdiction. But that gives basically also the possibility to detect really adverse information from transactional data until the moment of the application, which particularly in today's times is very powerful and goes beyond traditional also underwriting. And obviously, there's also credit bureau data, which can be all obtained then in a nice visual way, and also is used for decision parameters. Very important, I think, is generally speaking the limit calculations. Here again, there are flexible ways to do this. At Spotcap, with our Lendins solution, we have generally speaking 3 concepts. One is basically kind of a main affordability concept, which is relying on information from the bank account, particularly on the relating to the inflows, operational inflows, and the debt repayments. There's also a traditional financial component to calculate the respective amount based on a debt service coverage approach. But eventually, there's also a liquidity approach, which basically looks at the average balances over various times from the past, and eventually calculates what this company could afford as a credit amount, looking at basically historical movements of the bank balance, which then relates to debit amounts, depending a bit on the product also eventually offered. And other than that, there are various warning signals. We have also embedded both financial warning signals, but also related to KYC, AML, and fraud, to be using third parties like also threat metrics and the like. And eventually, if everything is fine, then an underwriter can manually approve a deal. Again, it can also happen automatically. We have clients where this fully automated within 15 seconds decision-making time, where only ex post there is some checks by the risk team if needed. And if that's basically positive in this case, then in terms of digital signing, there's a process where a contract is basically issued, and the customer's receiving an email with a link to access the portal. They can review the contract, they can sign it digitally, and this can then be followed also by a video identification, which is not part of this demo now because it would take too long. But that eventually also then is in line with all main European compliance requirements in terms of obtaining a qualified electronic signature. And then very important, once they have it, they can immediately access the funds. Either there's directly the loan amount issued to their account, or if it's about a limit and they can obtain it from there, they can basically decide how much and when they want to draw it. That's again coming down to the product details. And if they do this, then they can instantly basically access the funds and can also manage it always via the portal. Also when it comes to repayments, whether standard regular repayments, non-regular repayments, early repayments, but also when they want to receive, for instance, payment holidays through various types of forms. So that is, sorry for one or two interruptions with the cursor here, but that is basically the our solution, which I'm very happy to answer some questions also in the following. I think before doing this, it's also in light of obviously the times where we are. I think it's very important to mention that Spotcap is not only a standard solution for digital SME lending, which is based on let's say some sort of normal circumstances, but we also have the capabilities and the technology to help institutional clients to respond to the COVID-19 environment. That's particularly something we have done with our existing clients, where it was about to streamline processes, particularly when it comes to information provided by borrowers on paper-based tools, and eventually we have made a lot of adjustments to our clients based on our flexible architecture to then allow them to also make decisions within different environments and based on different circumstances. And again, just one example which I wanted to highlight here as well before answering your questions. And thank you very much already for listening. And yeah, I'm now open to those questions.
Yes, I actually encourage everybody to type the questions now into the chat. While I will ask, I have actually two questions for you, Jen. So the first one is, can you tell a bit more what were your results as a direct lender? So as you said, you were working from 2014. Mm-hmm. So what was the targeted customer? What are the number and the amounts of loans that you disburse? What is the quality of the portfolio?
Yeah, no, these are all very fair questions. So in the end, we have developed different flows for different type of SME customers. I mean, some of them are considered micro businesses, I would say, with as little as 50,000 annual revenues, going into a segment which where customers have sometimes even close to double-digit million revenues. So our offering basically started from few thousands up to 400,000 euros, and beyond that, obviously, it would be mostly then secured lending with some collateral involved. Our experience in that sense and the flow you have seen today was basically for slightly more established borrowers, those who are really micro businesses, where we have adapted a flow where no financial documents are required, where actually even more information is obtained from the bank account to make it as easy for them to apply also on a mobile. We have, as I said, we have issued a couple of 10,000 loans to them, and in total €500 million in euro amount in credit. And the performance of our book also was very good. I would say below, let's say, average default rates. We're talking here about around 2 to 3% annualized risk costs, which we had. And that is for an unsecured product in a segment which is largely underserved because, partially unknown in terms of how to best assess the performance. Actually, is a good result and a good, basically representative outcome also of our bank account models, but also other financial models we have in place, which again in a partnership scenario can be leveraged as additional data points as a complementary way. We can use our insights to build customary models, but obviously we have also seen that the risk models from our institutional clients are directly incorporated, and nothing from Spotcap has been used there.
And by the way, were you mobile first, or your solution were developed firstly for the online?
It was first developed for, let's say, desktop, but it's mobile responsive from the get-go. So we have not, only after 2 or 3 years and started to think about mobile. It's still a reflection in certain way that borrowers, i.e. SME directors or owners, are still eventually filling out the information required from a desktop machine rather than a mobile. But what we actually have seen is that more than half of them starting the application from a mobile. So in particular, the first 2 or 3, let's say, sub-steps have been often done from a mobile device, and then finalized on a desktop. And it comes, for instance, to upload financial documents. As you have seen, they're mostly not available on their mobile, but they have them on their PC at home. But I think it's very important to think mobile first here, and especially I think the smaller the businesses customers, the more mobile is important. For the more established ones, where there's usually also an organization behind with maybe a finance department, they tend to rather use desktop solutions.
That's true. Okay, and my next question will be, what does it take from a bank side if you implement a digital lending process with you in terms of probably resources, and so people and time and like everything?
So I think in the essence, right, is obviously it depends a little bit on what the objectives are. I think having a good understanding of how a blueprint or a process should look like is very important. So I think a conceptual framework of how this should basically the flow or the type of information and criteria used, that should be existent. There's not necessarily a lot of IT resources needed, only in case of significant integrations into their core systems, which we do offer also. I mean, we have a cloud-based solution, but have an integration platform which allows us to also connect to, let's say, on-premise environments and legacy systems. Here, as usual, if there is an exchange of data, there is some knowledge about, obviously, the IT systems also on their side required. And in this case, there are obviously some IT people needed. Other than that, we usually have, as part of our projects, which tend to take from 6 to 8 weeks to 4 or 5 months in the past. We do see multiple work streams, which obviously one of them is technology, but then also risk and operations. And there's usually a work stream lead on both sides, and then 1-2x people, let's say, on the operational side, to basically work together as a collaboration to make this project a success. But to summarize, in the end, we have obviously a lot of knowledge. We are very flexible. We do basically also professional consulting and not only a solution provider. And I'm very happy to take the lead here when it comes to the implementation project. But definitely the better and more precise and early on input we receive, the more successful most likely the implementation project is.
Okay, thanks. So we have here 2 questions that I would like to read. So the first one is there any bank which uses your end-to-end services to lend to SMEs?
Yeah, there are some institutional banks, particularly in the German-speaking markets. BAWAG, PSK in Austria has been one of the first one we onboarded in 2018 to do actually same-day financing for their small business customer, but also for new one. We also do have we also operate in Switzerland or as a partner solution provider to Cembra Money Bank, former GE Money. And since last year, and also in Australia, it's a financial institution, but also a fintech, where we offer our solution for a SME buy now pay later product. The company is called Zipco, and we are currently also in onboarding 2 additional ones, but obviously I can't reveal the names yet. So it's soon going to be 5 to 6, then mostly in the continent of Europe.
Okay. So the next question: what are the notable changes in the user behavior or trend in your market during this global pandemic? For example, more applications coming from X industry. What can you comment actually on your markets, maybe in Germany and then the markets that you are present?
Yeah, I mean, there's generally there's obviously more demand for liquidity and working capital as it was before. I mean, we were already, I think, in the past when I look into our direct lending efforts. I think the demand rather came from so-called asset-light industries because those are traditionally the ones which received less credit from financial institutions because of the lack of potential asset collateral. That obviously has even further extended, but it was particularly those industries which had the most severe lockdown in the early days. So also traditional retail and wholesale businesses. But also manufacturing businesses which have been hit the most, which sometimes also have less and less active inflow-outflow profile, and therefore with the missing payments coming in, we actually required the provision of some liquidity. We have particularly seen that apart from the liquidity provision, that repayment holidays, at least for a 3-month period, have been requested quite substantially, both by existing but also new clients. And here again, our solution has various possibilities from interest only over accrued or capitalized interest through repayment holidays. So there has been also a lot of requests for that.
Yes, exactly. And also maybe just I should mention here that actually the industries or the sectors that suffered a lot during this crisis, it was actually here in Europe, in the European Union countries, let's say, so a lot of governmental support, so within different programs, and also governmental guarantees backed for the loan. So actually, I think there was no real restrictions for the industries in the to receive the finance.
Yeah.
The next question is: can you share your funnel? What is the most difficult step for users?
Yeah, I think it's generally, and it depends a little bit from market to market, but I think the topic of providing bank account information is still the one which is, let's say, most uncommon to users if they also, compare it maybe to what they were used to be provided from the past years, also with regard to their house bank. So the first 2-3 steps are usually have conversions which are not 100%, but very close to this. The bank account, we have seen drops up to 20%. However, I have to say that it's very important that it's not only about this solution, but also basically by knowing what are the potential barriers, knowing where human intervention, so to say, via customer success managers, or potentially also some tools, like proactive chats, whether people need help. That's very important actually to ensure that people really convert in this funnel. And we have actually seen that many. So if you would not have basically people to support people in the process, then probably the dip when it comes to the bank account connection process would have been probably way higher than maybe 10 to 20%. So that is very important. However, this final interaction model should look like that there's some element of human touch required, some proactiveness towards the customer. The rest of the information is fairly standard, and usually if the application is meant seriously, and some are just trying it out, then this has been not seen to be a dip or there's no drop in conversion in those steps. So in the end, the majority of people who pass the qualified, let's say, account creation step, usually also finalizing the application. And we have obviously always tried to optimize the conversion, and the section for where financial documents were required, this document recognition part actually has massively helped to increase the conversion in the first place. Before we had this in place, only 2 to 3 out of 10 applicants have actually provided all the necessary information. So there was always some back and forth because some information was missing, and that with this recognition service there, which obviously can also block an application to be complete and therefore submitted can actually and has actually increased the conversion, the success by 2 to 3 times.
And do you use actually some call center, or maybe, I don't know, some emailing campaigns for the customers, for example, or for the prospect that has started, for example, the application, haven't finished, like stuck on one step and like saved it and haven't sent? Do you do something with this?
Yeah, we have actually a quite sophisticated task interaction model, which is a part of our, let's say, wider CRM solution, which again also has, I think more than 600 types of tasks, which can be performed either by a human being or, let's say, by the machine. And that, again, the trigger point for those can be also customized, for instance, by the financial institution. And what we definitely do is we do follow up regularly with regard to email communication. We do have also then after a certain period of time, if a customer doesn't move forward and has met certain minimum criteria, and then there's basically a task created for customer success manager to then call this applicant. This can even be embedded in some sort of preview dialer system to basically ensure that, especially for high volumes, the efficiency is kept very high. So yeah, there is a lot of different tasks depending on the stage of the customer, and actually also the let's say how let's say there's an internal scoring system almost to basically not only determine the likelihood of the customer to finalize the application, but also actually the promise from a commercial perspective, which then basically requires more human interaction than maybe for smaller or less positive customers. So this can be there's a combination of multiple things which can be customized and are usually very helpful.
Okay. And I think the last question is, since bank account analysis is the core thing in SME Lendin risk management, does your system process majority of different bank account statements or API connections? If it doesn't, it is manual bank account review. But actually, I think now with the PSD2, this task should be simplified a bit.
It is simplified. So, I mean, in the early days in 2014-15, there wasn't any PSD2 yet. So we have basically built our own bank parsers based on web scraping. And here it was basically, we had a 99% coverage of all banks offering online banking. in the markets where we operate, usually built over a series of weeks. Now, as you said it, with regard to PSD2 as well as open banking, and again, it depends a little bit from market to market, but there are third-party providers who are basically offering for close to 100% of the online banks or the banks providing online services a connection via a banking API. The web scraping is just a fallback, and if the customer in the process has to select the bank and then basically connect in terms of providing the credentials. If for whatever reason the bank would not be existent in that list, there's this fallback again of providing bank statements, and the process behind extracting the information from the bank statement is very similar to what we do in the bank account connection scenario, because in the end we are parsing information in both scenarios. By one is just coming directly from the online bank account, and the other scenario is from the user. So the information is also in close to 100% of the cases always directly available. The question is then about the processes around it and the policy, whether there is some additional level of comfort required in case of a customer provides only bank statements, because obviously in theory they could try to manipulate the statement. So we have also some for instance, document fraud detection a solution there to basically reduce that risk to a minimum. But in theory, there is no one needs to manually extract information from bank statements eventually in case the bank doesn't exist in this dropdown. That would be a good idea.
Okay. So as we are actually coming to a close, could you give some recommendations from your side, or from what could be the main steps for the banks to start building this digital journey for lending to SMEs?
Yeah, I mean the first step is probably, I think it's a matter of start a dialogue, whether with someone like Spotcap or some of your peers, going to events and basically also talk to companies who have already maybe started that project or these endeavors, and then in the other scenario is then basically looking into what you want to achieve, whether you have an active customer base or whether you want to actually acquire new customers, and then basically together discuss with someone like Spotcap what could be solutions to start, right? Understand that it might look, especially for larger or slightly larger financial institution, like a very big project. So there are ways to kickstart this also by maybe trying out individual modules first to solve a certain particular issue which you might have or which your customers might experience, and then move from there. We also have the possibilities for running POCs, for instance, to test certain elements. So it's not about always the big solution from the get-go, but it's, I think, about starting the discussion how to partially, first of all, digitally transform maybe your business, and also see basically what works best and where it makes sense to put most of the resources in.
Yeah. Okay. Thank you very much, Jens, for your contribution today, and thank you to all our attendees for being with us, for joining and staying to the very end. So thank you and goodbye. See you next time online. Thanks. Bye.
Thank you, guys. Thank you all. Bye-bye.